Okay, traders, good morning. It's Saturday morning, November 5th, 2016, and this is the weekly recap where we take a look at what's happened in all of our trades, all of our levels for the prior week. So we got a lot to talk about, so let's get right to it and start off with our latest closed out trade results. Okay, we'll talk about this in a little more detail, just highlighted here. We closed out one more profitable trade for the week. I closed it out Friday. We had a strangle on in the ES, S&P 500 futures that I had been rolling since October 12th. We had it in a good position. The market participated. We were able to take it off. We cleared that one with a $6,419 profit minus commissions. Ended up $63.64. So we were in that trade for 23 days. Hey, that's a month's worth of trading. Those are that's pretty much how that worked out to be. Not quite a month, but anyway, we should have made somewhere around $1,500 after I recalculated. Should have made somewhere around $1,500 in that trade. We ended up making a little over $6,300. So, you know, that's just it's just proof that, you know, this cost basis game that we play, that's really what it is, really puts you in a good position to turn losers into winners, and sometimes big winners. So we scored about, you know, maybe 3 to 4 months worth of profits in, yeah, literally 4 months worth of profits inside of in less than 4 weeks. So this is this was a home run trade for this strategy, and this is how we take small amounts, take strategies where we're just looking to chip out a couple of percent a month, and sometimes you get in there and you just bang it out of the park, and then that's what propels you up, and then you can get, you know, a strategy you're only looking to make 24% a year in. You know, you turn around, you're up 50% in the thing in less than a year, and you're wondering how you did it. Well, this is how. You know, you just take advantages of the opportunities like this. You play your normal game, and it works out. All right, let's take a look at our next. Okay, this is the actual sheet. You know, I'm just going to highlight it. We talked about it right there, but these are all the hedges I put against the position. We closed it out, you know, with a $900 profit. I actually had, you know, $1,200 going into it, into the trade when I was taking it out. Made a mistake, ended up with $900 profit. So so I had a little buffer there, but yeah, I should have made another close to $300 on it. Anyway, we closed it out here, $64.1950. The most money we ever used in this, that reflects my buying power going into Friday. I think $35,000 was the most I had ever committed to this trade, to keeping it in check. So so anyway, we're going to log this one. Nice trade, and we'll move on. Alright, here's our crude position. And we put this one on October 21st. We've got 42 days to go. Guys, let me do this so we can see things better. There we go. Okay, we've got 42 days to go. So we've been in 13 painful days. I put this one on right after, I'll show you on a chart where I marked it, but, you know, probably 25, 26 days ago, we had the hedgers that got net short this market in one of the biggest short positions they've had in a long time. I really don't want to trade against those guys. I don't know if you remember, but I stated that I was waiting for a pullback before I put my strangle on, just to try to take some of the edge off the upside, because I knew these guys were really short and didn't know how much we could get down. Hey, they've been pushing this thing down relentlessly. So anyway, I've been trying to stay ahead of the curve and hedging. So here's I sold the 55s, the 53s, and the 52s to hedge my strangle, to keep the deltas in check. So I'm comfortable with the position right now. So far we got 17 contracts on. Here's all my hedging actions. We're down 36.76. Not too worried about that. We're just trying to keep it between the goalposts and let time whittle away. At some point in time it'll start waffling back. More than likely crude will overreact again to the upside at some point in time and just drive this thing straight through the roof to the other side. When you take a look at the chart on this, you're going to see that this has just been, these last probably 40 trading days have been very, very brutal for strangle traders. And if you've been holding on to this, man, my hat's off to you. I know a couple of you, we've all been trading this thing straight up, straight down. So yeah, it's been a rocky ride, but hey, let's see if we can hang in there just a little bit longer. Okay, so that's my crude position. Nothing to do now until we open back up. If we get more down moves mechanically, I have to add. I add incrementally and I try to add far away because I'm still trying to give myself to a 52 cushion to the upside. That's what I'm trying to do. Give myself a cushion to 52 in case we do get another rally up. I feel very safe at 52. So anyway, it's a crude trade. Alright, let's go to the retirement account, Broken Wing Butterfly. This is the first one I put on September 26th. 58 days to expiration. We currently have 20 days to go. So we've been in this trade for 38 days. It's performed very nicely. Currently I'm up 961 in it. And you know, we're due for a rally in this stock market. I think we're going to get a big one after the election. I think we potentially get some more down move. Scare the children one more time, potentially that washout move to the downside, and then we're going to see some upside action, guys. Hey, we were down 9 days in a row in the S&P, and for looking at this from the downside perspective, investors and traders just aren't used to the S&P being down 9 days in a row, even though it's just trickled out to the downside. We're just not accustomed to doing that. I think I haven't looked at the stats, but I read where it was, it hasn't been 9 straight down days. I think Drew sent this to me, since not in the 80s, early 80, if not 1980. So, you know, it's in a secular bull market like we have, which means it's going up forever, guys, but it's going to get rough in between the peaks. Yeah, 9 straight days down. Investors and traders are just not accustomed to that. They're accustomed to our market, you know, making them feel good. So right now they're starting to feel a little anxious. And why can't this thing go down 9 days? I mean, we've watched it go straight up for 40 trading days. How many occasions? I mean, just ridiculous moves. But nobody cares to mention about how ridiculous up moves are. They really focus on how ridiculous down moves are, because 99% of the world is long our stock market. So anyway, I'm thinking we're going to get a rally. I'm thinking this thing has the potential. With 20 days to go, we get into the teens next week. Even if I get on the downside of this before she kicks up in the rally mode, hey, I could really, really knock it out of the park with this one right here. So that's what I'm playing for, a rally, and we'll see. We'll see if my bet pays off. Oh, sorry about that, guys. Alright, this is another broken wing. This is the last one I put on. I can't show you the middle one, guys. We're still in a profitable position in the second broken wing butterfly I placed, but I overlaid some options on top of that with my iron condor, and it's really hard to show you the graph on that one. I can just calculate the price, the current mark price versus trade price, and you know, I'm up a couple $100 in that trade. This one we're down 790, nothing to worry about. We have 48 days to go, nothing to do, just let this one play out. Okay, this is the iron condor that I placed in the retirement account. We're in beautiful position in this one. We have 34 days to go. We're up $43, nothing to worry about. regardless of what takes place Monday, I'm going to place an iron condor in this account. Whatever price it is, I expect IV to get pumped in a little bit Monday, pre-election day. So I want to take advantage of that, what I believe is going to be a vol spike going into Tuesday. So no matter what, I'm going to be adding to this position Monday. That is the other way that we make, we turn portfolio returns, we juice them up. We take advantage of the vol spikes. So that's the only way to do it. You take these strategies like in my retirement account where I'm trying to get 4% a month. Market gets a little tough. You get these vol spikes, it goes down, people get scared, and hey, you've got to trade, put these non-directional trades on in the face of those, because that's how you take a strategy where you're making 4% a month and you turn around 1 month and you're up 15%. So that's what we're trying to do. Alright, here's the Crude Iron Condor. Again, this mimics my personal account. I'm trading right in lockstep with this account. We're trying to double the $25,000 that we have in this account. I have a like amount set aside in my personal account that I'm trading right alongside this every step of the way. So, you know, whatever return I'm getting in this account, you know, I'm getting that plus more in my retirement account because the expenses are a little bit less. I'm sorry, in my personal account. Anyway, we put this one on October 25th. We have 42 days to go. We're down 26.60 in this account. Nothing to worry about. This is price. This is 10% lower, 10% higher. Again, I'm trying to protect that 52 line in this account as well. So I think this market, it can go up 20% just like it goes down 20%. Crude is one of those markets that doesn't move like the stock market, so it's not, the options aren't skewed like the stock market are, so we get preferential treatment on both sides, calls and puts. Anyway, nothing to do here. We're in good shape. Man, thought I saved all these guys, sorry. Alright, what we need to look at next is the levels. So let's switch over to the levels right quick. S&P. Alright, one of the tamest down moves I've seen in a long time. 9 days down. It stopped right on top of support, which coincided with our first level of the week. Stopped it dead in its tracks. A daily close back inside of this rectangle, guys. And for me, that's a very high likelihood of a very big move to the upside. You see, this is what I call a scenario 1. Drops down, rallies up, trips back down below where all of this distribution takes place. Large battles take place inside the rectangle here. So we close back up. History tells me, after watching these kinds of trades for decades, that a close back inside this rectangle, we have a high probability chance for a continued up move. I'm looking for a rally next week. So, you know, this kind of fits right into the scenario. I think we've been handed a very, very good opportunity going into the end of the year. My play on this is if we get down, I'm going to be looking at volatility in Tuesday to really lay on a lot of puts in the S&P. So sell a lot of puts. So anyway, that's how the S&P looks. You know, levels held. Bond market was a good boy this week. Sorry guys, I didn't realize the pointer wasn't working. Anyway, I don't need to go back to the S&P. You saw what I was talking about. So here's the bond market. Stayed between the lines. No issue there. Hey, this thing has just walked the dog down this channel. It's just, again, bled out to the downside on a very, very trickle-like basis. And this is where we're at right now. But bonds did hold between their levels. Okay, guys, this is crude. I know some of us out there, all of us just about, have been trading the crude market ever since this thing catapulted up and then collapsed down. Those are very, very hard trades to hold. Same as this move down, this move up. A crude is not moving in any type of back and forth manner. It is just rocketing one way and rocketing the other. I don't know when it will stop and turn into some kind of range, but we just have to try and ride what we have and go from there. But some of you guys that are in these positions with maybe a little bit more than a week to go, I probably wouldn't put another trade back on this thing until we rallied back up. Once you get clear of this one, you know, this range right here, if you look back to your left, kind of a good area to put a strangle on. You gotta really get aggressive in this area right here in the crude market, I think, on strangles. So that's the zone I'm looking for. I've got my position on, so you know, when I come out of mine, I have no idea, but I will be looking at that area right there for probably until this thing moves out of this range. But this is the area where I remember Mike was sweating a position that was pressing into the upside, and I had saw a report on Sentiment Trader where the hedgers were net short their biggest position in decades. So I felt confident that at some point in time the market was going to give. We never know when. The hedgers don't either. They just know, they see how things are about to unfold. They have no idea when it's going to unfold, but they have an uncanny ability for getting short and long, their longest positions close to the peaks. This one was no other. This one wasn't an exception. We got some relief, and then it pressed back to the upside, scared everybody, and then completely collapsed. I showed a chart from the last time that they were this short the market. I can't remember what year it was, but the collapse they had after being short, equivalent to where they were here, was much lower. It was much more of a down move than what we've seen so far. Don't want to scare you, but I just want to make sure you're hedging properly, because that other move would have, if this one's comparable, would probably take it back down to the 40 level, you know, before it finds support. I don't know if it's going to do that or not, but and neither do they. They've taken quite a bit of money out on this down move. You guys have seen your positions that you're holding this trade through, and you've done everything right. Hey, it's like I've said many times before, the market's got to participate. We just have to do our job, stay mechanical, and I have no opinion on the crude market. Not like I do the stock market, guys. I just try to trade this thing mechanically. I try to trade it less aggressively than I do the S&Ps, because I know it can run on streaks that just defy all logic. So anyway, that's a crude market. Dollar collapsed. Going into the week, violated first level, second levels held. Gold rallied in the face of the dollar collapsing, and you'll notice it went through the first level, just like dollar went through its first level to the downside. So, you know, in a normal market, guys, normal market environment, I should say, that's how these things work together. They haven't moved like this together in a long time, just because of the manipulation and the government intervention. But for last week, hey, this was like reminiscences of old. Okay, here's TLT. Again, this is a weekly look at our position. Again, we were adding puts up in here. So we see this thing walking. This is the downward channel on a weekly time frame. You know, again, it wouldn't surprise me if we got any type of rally back up in this thing to try to get at least mid-level in this downward channel. So that wouldn't surprise me in the least. Here's a look at 30-year interest rates, and you know, guys, I just really believe that's the low. I really believe next 30 years it's up and away. So that's a look at the levels for the week. Now let's take a look at the stats surrounding those levels. Alright, here we go. This is the week that we just finished, and these are the if the market. So let me take you to the stats. This is just my way of showing the penetrations. So the stats here give us the percentage time for how often the underlying closed inside the specified range. So you can see we're all neck and neck here at the second level. Second level, all of these things have about a 94% chance of closing inside that. And you know what, guys? From a statistical standpoint, no matter what market we're trading, that's exactly the percentage of time that these that the theoretical edge says that we have, somewhere around 93%. First level, you can see, is a little bit more volatile, which it should be. This right here, the crude market is actually within plus or minus a couple of percent of the theoretical statistics for how often it should stay within that range. Bonds are still the most volatile. It hits that first level roughly 50% of the time. This is all good trading info, guys. I use this on every time frame to adjust my trades with. Alright, let's see. You know what? I'm not going to go into the touch level status. It's just another look that's really just for me how I look and put context around the number of times it touches a level versus closes outside of a level. That's important information for me too. Let's see what else we have here, guys. Okay, I didn't capture any of the updates for the new trading strategy, the intraday trading strategy I have with the automated signals. I didn't want to inundate us in this one brief, so I'll cover that maybe Sunday night or something like that. Just wanted to give you the latest. Hey, next week's going to be big, guys, and I'm going to send an email out here probably today with my thoughts on the market for next week, what we can do Tuesday, and try to refine a little bit more what I'm actually looking at for the plays going into and out of the election. Anyway, you guys have a good weekend. This is BA signing out.